had this 2017 high, which is this yellow trend line. Look at how you closed below it and then you reversed back up. And then you closed below it again, but you never got a secondary lower close. That's something I like. I'm sorry about that notification, but something that I've called confirmation is where you get a second lower close, and you never got that. And to me, that was telling me that there was accumulation going on there. And I think the biggest signal here was that basically when the Voyager bankruptcy was announced, Bitcoin didn't fall, right? When you get bad news and something doesn't react negatively, that is a great indicator. So short term, and I'll just draw some trend lines on here for me, and I keep it super simple here. It's just sorry about that, but yes, basically what you have here is this trend line here. This is where we currently are, which is 21,800. That's your current resistance. If we can break through that, you're likely headed to this level of 25,500. So my short-term target's actually 25.5. I think we get there within a week or two, maybe sooner. The next big support after this bounce is likely that 12 to 13,000 level. And again, number one, it's a technical level. So you got this pivot high right here around 13, right there. And then you have the secondary level here around 12. And then the other thing that I like to always remind people of is there's a measured move here, which is a technical measurement where you take this drop and then we had this consolidation here. All right, so and then you take this high and you do the same extension move that you had prior, and that brings you to about 12,000 down here. So this distance should equal this distance, which gives us that 12, 13,000 marker. And then the last thing I would say is that in general with Bitcoin, previous winters have basically resulted in 80 to 85%. We should all be investing in oil stocks, and oil is going to go to 150, it's going to go to 200. And I looked at the Exxon chart when this was going on, and this was all the financial media was all about, like buy oil stocks, they're safe. And I looked at it and I'm like, all right, so let me look. Well, number one, look at that chart extension on Exxon Mobil here. And then if you go to the weekly chart, I'm like, holy cow, look at this double top from 2014. I'm like, okay, now I'm actually liking the fact that they're pumping it and getting everyone max bullish. And then I'm seeing these negative signals. I actually ended up going short, and you could see what the stock ended up doing. And so that works for crypto, that works for this. But I think the bottom line is it's all about if you can't control your emotions, maybe don't turn on the news or don't go on social media. If you have the ability to use it to your advantage, then it's good to have it in your portfolio of tools. Just because I think it's going to 12,000 doesn't mean that I'm not going to start a accumulation phase. So I'm very aware that as a trader, I'm not perfect. I have my downside targets. I'm very aware that they may not get hit. And so what I did was when we actually went below 20 and we got to 19, I picked up like a very small starter hodl position in Bitcoin. And I think I announced this on Twitter, is that I have my total amount that I want to invest. So let's say, I don't know, $100,000 in Bitcoin. And basically I divided up into 6 parts. And then I basically put 1/6 on the line or bought at 19,000. And then what I'm going to do is every 2 to 3,000 lower, I'm just going to buy another 1/6 and accumulate 6 total positions, making up my full amount. So, again, I don't want to say like 12,000 and then it gets to 12,500 and it goes to 100,000. And so I want to be kind of in the ballpark and in the accumulation zone. And if I only have a half position when it goes to $500,000, okay, well, I'm still making money, right? One of the things I saw on Bitcoin going back to last April was this head and shoulders here. So let me show you here. So here, and I love, by the way, Frankie, thank you for letting me teach a little bit. I love this stuff.
Of course.
So here was the head and shoulders pattern right here. And you can see it there. So this neckline from connecting this point to this point is inclining or flat, and this one is inclining. That's a valid one. And what you can do is you can calculate, the reason why head and shoulders are awesome is because you can actually calculate the downside target. What you do is you take the highest point of the head and you drop a plumb line straight down. And you take that distance, and when you break the neckline, you should, in theory, let me get rid of that, you should actually go that same distance. And what you'll find is that if you take this distance, when you broke right here, the exact distance is when you fell to this low. So this low right here is this exact distance here. That would be a completed head and shoulder pattern. So just some cool stuff like that about how the charts work and the symmetry of it. And it really is amazing stuff, really. And, the whole way down, even though obviously, it stinks that it's dropping, you have to be like, all right, guys, so, and by the way, all I heard at that time was, I'm like, well, on-chain analysis says this and on-chain analysis says that. And my response, by the way, for that was that, sure, on-chain analysis is like fundamental analysis. Like in the long term, it matters. But when people are freaking out, emotion is everything. Emotion is going to drive price in the near term. Fundamentals drive it in the long term. So that's number one. In the TA side, what do you say? I just, when they're like, oh, it's hogwash, I'm like, well, I've done it for 20 years and, I'm living in my mansion over here and like, maybe it's hogwash, but if it's working for me, it's working for me. So I mean, those are some of the things like that you can say, but listen, I think the best thing is I just on Twitter and different things, I put out my levels, and then eventually I believe that if I'm right enough times, people will come around. And I've seen that happen. I've had people that said, hey, I thought you were an idiot back when it was up here. And now I think I actually have looked into it. I follow you and I think it's amazing. And you've actually saved me money by doing this. And that's the best reward, obviously, helping people out. All right, well, you called this at a level and it didn't work. So then all of technical analysis is BS. But what people have to understand is that technical analysis is the law of probabilities, right? So even if you get to an 80% success rate, which is what I do on my swings, that still means out of every 10 trades, 2 times I'm going to be wrong. And so you have to look at it like that and keep that in mind about TA, is that there's no perfect science. I mean, trust me, if it was perfect, I'd be like Elon Musk. I wouldn't even be working. I'd be riding on my private jet, so obviously there's some issues there, but it's about the probabilities and money management, really.